How's everyone on Clown World doing today? I hope you're excited. We're going to be talking about Pepsi earnings today. Reported pre-market. Obviously, we'll see. We'll see what that amounted to. Nothing crazy so far. Obviously, the stock's just kind of up with the general flow of the market right now. We were seeing some recovery this morning after a rough month, as well as really last week's been very rough. So we're seeing some recovery here, but let's see what the earnings still have to say about this one. So they posted a non-GAAP EPS line of $1.79 as a beat by 6 cents and a GAAP EPS of $1.60 misses by 10 cents. Would like to see better numbers in terms of a GAAP EPS standpoint. I'd like to see what that issue might be as to why they didn't hit that in terms of actual GAAP EPS. I'd like to see that. But not bad, all things considered. Nothing too crazy. I feel like we'd see some recovery, though, there. But from a revenue standpoint, pretty good on this aspect. Actually, really good quarter for Pepsi. $20.19 billion is up 11.6%. Beats by $800 million. It's a very large beat for the scale of, Pepsi. They're not a company that typically meets by this large of a margin. And again, I mentioned some of the positive aspects that we saw year over year. Weird thing we've seen is an increase in snacking, so the Frito-Lay brand should see a decent number here. But also the restaurant segment alone is going to be carrying quite a bit of that weight there as it grows. What in the world happened there? Some people may question what in the world just happened there, but that's what Seeking Alpha wanted to do to me. I find it quite disrespectful. Let's see if we can get this thing to load back up again. If not, it's not gonna. So let's look at the press release now. Get cracking. Seeking Alpha, you know what? I'm gonna smack you right in the tuchus. Obviously we saw nice net revenue growth year to date, up 13.2%. So solid in that aspect. Again, I think restaurant segments doing quite a bit there. EPS line so far, it was a decrease year over year. I don't see how they missed year over year in terms, or declined year over year in terms of EPS. From that perspective, I don't see it, but who knows? On the year though, still up 20% year over year, which is solid. I just don't see how this quarter missed on that aspect. Would have expected a little bit better there. Organic revenue growth, obviously something they tend to talk about quite a bit, as it's a new market segment for them. I mean, it's not like significant numbers here, but 9% growth. We'll take it. 8.4 year to date. Not too bad. Ramon LaGuardia, he's pleased. He's pleased with third quarter results. We get it, but we like to look at some of the finer details. Let's zoom in just a wee bit for you. Frito-Lay, 6% growth. Quaker, Gruth? I am Gruth. Not bad there, all things considered, for Frito-Lay. 6% growth. So, again, I saw a little bit of growth there. I mean, not going to say I called it, but I did. Quaker Foods, obviously nothing crazy with Quaker. Nothing in the world besides maybe a nuclear bomb would make Quaker shoot up in terms of the revenue. If there was a nuke going off, people would buy a lot of oats, let me tell you. PepsiCo up 7 was actually pretty darn good for them too. I think they'll define it into restaurant segment too. Show me what the segments are specifically in the beverage segment. I really hope so, but if not, who knows? Latin America up 27, good. Europe up 9. Africa, Middle East, South Asia up 33, and Asia Pacific up 27. So nice, all things considered there in terms of revenue growth for really every segment worldwide. Not too bad. Not too bad by any means. And organic, it follows suit. Nothing too crazy there, all things considered, but it follows suit. Operating profits, nothing crazy to note there. Let's see. Year-to-date performance, don't mind if I do. Frito-Lay's up 5.5. Quaker down 3.5. Again, I think it's because people were buying a lot of stuff last year. As I mentioned, people were going in doomsday mode and buying a lot of these products. But PepsiCo up 12% year over year, and again, I think that's mostly due to a change in the restaurant segment. So that doesn't shock me by any means. So, and globally, doing well too in terms of revenue growth, which is very nice. As far as guidance and outlook, on a non-GAAP basis, they cannot predict certain statements for the fiscal year. They're expecting to deliver approximately 8% organic revenue growth, because that's apparently always a metric that everyone's looking at. Not me personally, but previous guidance was 6%. At least 11% core constant currency EPS growth versus prior guidance of 11%, so the exact same. 12% core EPS growth versus 12% guidance. It's the exact same. Total cash for the expected here return to shareholders is expected to be $5.9 billion, 5.8 in dividends, and $106 million in share repurchases. Obviously, a lot lesser in terms of share repurchases. If you've seen historically in the market, share repurchases are at a freaking high point right now. So to see a little bit lesser in that, it's refreshing to an extent. You look at the valuation of this stock. Obviously, we'll look at the balance sheet right afterwards. Trading at a market cap of $207 billion, bringing in an annualized revenue here, likely somewhere right around the $85 to $90 billion range. So not trading too expensive, and a PE ratio of 25. Not trading incredibly expensive, all things considered, from my perspective. So let's look at the balance sheet now real quick. There it is. There it is. Total current assets. Look, they're giving me a 9 months comparison. I like 9 months. I'll take 9 months. Okay. Total current assets right now, sitting at $23.7 billion compared to $23 billion. Nothing crazy in terms of changes here. You see more of a assets held for sale is really where the majority of that change comes in. Nothing too crazy. Very small changes, all things considered. Total assets in general at 93.2 compared to 92.9. Again, very slight changes. Nothing crazy. Would hope that liabilities tell a similar story. Current liabilities at $25 billion compared to $23.3. A little bit of a rise there, but total liabilities in general did fall, sitting at $77.2 billion compared to $79.3. So they were able to pay down some long-term debt. So that's a positive thing in my perspective. 15.9 on the stockholder equity compared to 13.5. So it's positive. I mean, that's positive numbers, and I don't think you can say they're not, because I like it. So again, the stock this is one that's really just a buy and hold for really forever. I mean, if I'm being honest with you. So nothing that the earnings will really do to change that. Nothing was concerning here. That's what I got for you, and I hope you have a great day.